So anyways, so let's quickly delve into this. So the first question I would like to go with you is who is Jude Dike?
Okay, so I'll start with software engineer, tech founder. I think I always knew I was going to be a tech founder. From I think final year of uni, myself and I think you remember one of my friends, Raymond. Myself and Raymond started out something in AI at that time, right? That was back when AI was still in its early stages, but there were a couple of things that you could do with AI and chat. So we called it LoRa, right? The entire idea was supposed to be LoRa being like AI for customer service, where depending on like whatever it is that you were doing, and we had a few use cases for like pizza ordering, for like food ordering in general. So I'd come and say, this is what I want to order. And it just kind of like helps automate some parts of it. But nonetheless, we'd gotten into one accelerator / incubator program. One of the things that we learned from that program was we didn't know shit about business. Sorry, I hope I can curse. We didn't know anything about business, right? And so that didn't work out. We then decided to go into like paid employment. So I think over the years, from I think that was like 2016 down to 2018, I then joined another group of guys, Canadian Nigerians, who were trying to build out a system in the supply chain. And it was at that time that I just started building for crypto, or building on the blockchain, let me call it that. And so we built out this entire supply chain system for agro. It was an agro supply chain platform on the blockchain. And we got an interview into YC, but unfortunately that didn't pan out. And then in this time, I'd also just sort of contracted for a couple of companies here and there, mostly startups. But once in a while, I think at one time I'd consulted for Sterling Bank as well, sort of like building products in-house. Then by 2021, at this time, I'd been about 4 years in the blockchain ecosystem. This was just right after the DeFi summer, where pretty much everything skyrocketed. And so we decided to, myself and a friend of mine, William, I decided to start out something for investing in startups. So at that time, one of the things with how DeFi summer blew up was the case of a lot of crypto companies at that time, like a lot of VCs weren't really touching crypto companies, right? It was usually more a large company that's doing an offshoot, or you have people who created a product or created an idea and then crowdfunded from the community. That was the whole case of ICOs and IDOs. And so we took the concept of like ICOs and wanted to use that as the same sort of concept for fundraising in startups. So when we started that out, we got our first bit of funding from Greenhouse Capital, the investment arm of Venture Garden Group, VGG. So it turns out that they were also thinking of something similar. They were trying to determine how, because Venture Garden Group is basically two guys who had started out the company and then started creating like different companies to sort out like different problems. They started first as like, let's say, a consulting agency, if I can call it that. And then they started building up products for different problems, especially tailored around like government solutions, right? And the combination of all of these companies was now called Venture Garden Group. And so they wanted to do something similar, but with, other startups that they didn't found by themselves. So to basically try to bring other startups that tied around like things that they were trying to do and sort of grow those startups as well. So it was an interesting, let me say, symbiosis, right? And so they invested in us. They were our first major investors, put in 100K. And we launched by June of 2021. And so when we launched, the buzz caught on quite well. 2021 was a very, very good time for venture capital, right?
Yeah.
Paystack had exited, Flutterwave was a unicorn. Everybody and their grandmother and the diaspora wanted to invest in a startup that was going to be the next Flutterwave.
That was too. That was 2021. Sorry, that's
that time, like life was very good. And so people were looking to invest in companies, right? And so it was just kind of like we turned up at the right time for that. So over time, I think between 2021 and 2023, we had done about 1.5 million in like a couple of startups invested through retail. But that was also when the venture downturn now hits. Like companies didn't read the valuation people thought they would. And so a lot of things pretty much died down. So at that time, we got into Techstars. And as part of like the Techstars program, one of the things that we decided to do was to sort of re-strategize. Now, venture capital wasn't panning out to be what, it wasn't panning out to be what we thought or what we expected it to be. But there was something there. A lot of people were looking for investments that they typically would not have access to. And so the product and the strategy that we had built was something that wasn't just necessarily built for venture capital. It was that venture capital was the first use case we had for it. And so we decided to also bring in another type of use case, which was less volatile investments. So in this case, that was where private credit came in. And now the beauty about private credit is that it's a bit different from like most Nigerians, the only thing that we know of is either I'm doing treasury bills or now mutual funds.
Mutual funds,
So private credit wasn't really something that a lot of people knew of, right? One of the biggest aspects of private credit was commercial papers. But commercial papers at that time, you needed a minimum of 5 million naira per CP, per individual. And so when we looked at that scenario, we thought, now how the venture capital one had worked was that because the minimum check size for VC for like venture capital is like maybe 20K, 10K. So what we typically do is we created an SPV where we put a couple of people together to reach that 10K. Then that SPV is what sits on the cap table. And so that structure also was something that would work for 5 million, right? Bring a couple of people together who have like 100K. If it or passes 5 million, is one SPV, is that SPV that would now be with the asset manager as like the entity for the 5 million. And so when we tried this out early 2024, and fortunately for us, it was a really big hit. We tried it out with a down-take commercial paper where we're looking to just hit like, at least if we hit 5 million, then we know that this thing makes sense. Now, the commercial paper was something that lasted for, I think, 4 days. But by the third day, we had already crossed 20 million. I think we ended at 27 million. So, I mean, that told us that there was something there, right? So we continued that. And by the end of 2024, we had done about 260 million in commercial papers. So 2025 started with us like pushing this further. We ramped it up, ended the year with about 1.3 billion. And so now, so within all this time, right, we've been applying for like a SEC license, especially on the digital asset side. Now, what the digital asset side allows for us to do is tokenization. Now, the beauty about tokenization is that tokenization is distribution, right? It's that you can get, so in the way we've done this now, we did it through the GetEquity app, and we did it for local investments. But if you want to take things global, the blockchain is typically, I would say, is the only way to take things global. Like the biggest advantage of the blockchain is that anyone from anywhere in the world can access it, right? You're not limited to geography. And so what that then helped us, or that was part of why we applied to the SEC for what they refer to as an ARIP program, the Accelerated Incubator Program, to be a digital asset issuance and trade, for a digital asset issuance and trade license. So what that means is that we can issue digital assets which are derivatives of already SEC approved investment products. So these can be stocks, they can be commercial papers, private credit instruments, bonds, whatnot. We can create digital representations of them, issue them, and allow for people to buy and sell.
Okay, makes sense.
Now, fast forward into this year, I think at the beginning of this month, we just finally got approval into the ARIP sandbox, which is the very first stage to a full license. Now, because SEC doesn't have the license yet, what they have is a sandbox where they have, I think right now there's about eight or nine of us where SEC is actively monitoring from a digital asset standpoint. So the ARIP program is for digital assets in general. So where they're currently monitoring for the different licenses that they want to be able to allow for in that sector, in the sector of like digital assets and digital issuance in general. And so what this now allows for us to do is we can now take what we've been doing a step further. If we've been able to do, I think right now we have about 2.3 billion in AUM, 2.3 billion naira in AUM. If we're not able to scale that up to allow for anyone from anywhere in the world to be able to access those, that means that, an example, private credits, which can be commercial papers in Nigeria, with CNGN now, which allows for you to have tokenized Naira, it means that anybody from anywhere in the world can buy commercial papers that are doing 23% while we have a stable Naira. It means buy USDC, exchange my USDC for CNGN, and buy into a tokenized commercial paper. Or stocks, right? We have a lot of Nigerian stocks that have done in madness. Aradel, GTB, Zenith. You can also do this. And so that's the goal for us this moving forward, is that from the local side, we've been able to at least establish presence on the local side. Is now taking things globally.
Okay. So like the process you talked about from USDC to CNGN, basically for people in diaspora.
Exactly.
Yeah, because I think if a person is in Nigeria, you can just easily move to CNGN.
If you're in Nigeria, you can basically, in fact, there's a direct rail for you to buy CNGN by just transferring money to an account. It funds your wallet with CNGN. And almost every Nigerian exchange now has CNGN.
Okay, all right, makes sense. So that the introduction was really very thorough. You went very deep. So now let's let's get a little bit deeper. So now, from engineer to founder, you started as an engineer before GetEquity, like you just said. Looking back, what problem did you see in Africa's investment ecosystem that convinced you it was worth dedicating years of your life to solving?
Okay, so I think the very first one would be, so while being an engineer, right, I'd always been at least one of the first 10 engineers in most companies I'd worked with, because I'd always worked in startups, right? And I'd always gone from scaling a startup from like 0 to 1. In fact, that was typically my specialty. And so for most startups I've worked with, even as I was an engineer, it's that you would usually be part of like the fundraising process. You see how fundraising goes, you see how marketing goes. And one of the biggest headaches of any business is fundraising, because you actually have to take time. Yeah, you take time from doing the regular day-to-day things that you're doing to meet with this VC, that one. It's just meetings upon meetings, traveling to different places. And so part of like my biggest question was, how about if we could make this easier, especially from the 0 to 1 aspect? Because the thing with VCs as well is that VCs were and especially like on the early stage side, right? Raising venture capital is hard because there are a lot of companies just like you that are looking for money. And so how are you able to distinguish yourself? Whereby usually in the first instances, the founder puts in their own cash. Maybe they even raise cash from like family and friends. But for a lot of founders, you don't really have those family and friends to raise cash from. So how would that work? And so what we started out with was that first 0 to 1, that your first 100K. That was where we wanted to focus on, in getting those companies to the point where they're now able to raise like standard VC, right? And raise the growth fund. And the strategy was quite simple. People were able to invest on that very early stage, because in that very early stage, what people are investing in typically is the founder or the idea. A lot of people are investing in the idea because maybe it's something that they wish they built themselves, or it's something that they would like to use, or they're investing in the founder because I know this guy, he's a smart guy. And well, if the money goes, I don't really mind, which is, to be honest, how most of my own investments went. Maybe that's why they all died. But anyways, that's it. So the goal of that was that early stage. And by the time, they had major VCs investing and had grown to a certain point, we would exit. So strategy was always invest at pre-seed, exit pre-series A. And right now we've had about, I think, 4 different exits. Yeah. We've had 4 different exits out of, how many companies did we list? I think we've listed maybe 12 or 15 on the public side. But while we were building this, one other thing that we saw was that there were a couple of, let's say, groups or syndicates that they already have their process. They already have their users. They're not looking for more users, but they just wanted a way to manage like how the money comes in, how the money goes out, all the people and their shareholdings and all of that. So with that, we did, what's the word called? With that, we created like a syndicate structure, because that structure also worked with the technology that we had built, right? So we created a syndicate structure where you having your own syndicate, you could come, sign up, invite your members in, and then like create all the deals that you need to and syndicate those deals. So we had a couple of users from ARM to a couple of us, ARM, Future Africa, Lagos Angel Network, and a couple of other like individual syndicates as well. So I think in that instance, I mean, all of that is no longer as juicy right now because of like the whole venture downturn that happened back in 2020.
I think that was with the Silicon Valley thing with FTX collapse. See that one?
There was a lot of things, to be honest, from FTX collapse. A lot of things happened at the same time. A lot of companies exited, but what they exited at, the value dropped by, let's say, some 40 to 60% almost immediately from the companies that exited in 2022. Then a lot of startups, the first major thing that happened was the US increased, I think because of inflation, the US increased interest rates. And so the thing with VC and how venture capital works is that venture capital is risky money. And with risky money, right, you tend to compare it against other like opportunity costs in this instance. So if I'm to take money now and say, I want to give it to you to do business with and pay me back 50%, I'm going to compare that 50% against if I were to just carry my money jejely now and buy treasury bill. I know that I'm sure of getting my money back. But if I lend this money to you, right, there's a very high chance that you might not pay me back. So that risk impacts on the interest rate I'm going to charge you, because that's opportunity cost on my money. And so when venture capital came in, or when US increased interest rates, a lot of people were like, look, especially if you're managing other people's money, the one major thing that you always want to rely on is that you're able to at least return their money, not that the money has shit. So typically, it is maybe like only 10 to 20% of the money that you're managing that you would put in high-risk investments like VC, right? And so a lot of the money that would typically flow into VC went into treasury bills. And that was the first instance. Now, because a lot of money that people would have used to raise follow-on rounds, there were a lot of companies that they were hyperscaling. And hyperscaling because anytime we need money, you know what, there's always money, there's always a new place to go and raise from. Now, the place that you would typically raise from has dried up. So a lot of companies didn't have money to function again. Then those companies died. And like that. So it was like trickle-down effect.
Yeah. So, you mentioned something about like 4 companies exiting from your for your company. So what was their exit strategy? Was it like typical outright sale acquisition, or was it like yield?
So remember I told you our own strategy was a lot of these companies, we invested in them from pre-seed. And so, for example, two of those companies got into major accelerators. One got into YC. And after YC, they raised, I think, about $2.5 million. Now, this is a company that we had invested like 5K. Right? So, but invested 5K at let's assume we invested 5K at like $1 million valuation. Now they raised $2.5 million at like $10 million valuation. So in that particular instance, when you're raising, right, one of the things that you also do, or that you can also do, is you can offer the current people who are like coming in, which is the current investors, you can offer them, or even offer the company itself, back their shares, let me call it that, at a discount. So we're like, do you guys want to buy us off? Do you guys want to buy us out? And because it's at a discount, so let's assume they were raising 2.5 at 10. Well, like, okay, but we'll be willing to sell for 6x. Do you guys want to? And they bought us out. So win-win for everybody, right? The company got back some of their cash at a discount. We got at 6x, which is beautiful. We love it. When you pass it down to your users are happy, right? Because they got 6x of their money. And that was in like 2 years. And so like that. That was typically the strategy we did for all 4 companies.
Oh, okay. That makes sense. So let's move on to like rethinking capital markets. So traditional investing in Africa has largely been limited to like public markets and handful of private networks. How is GetEquity trying to democratize access to investment opportunities without compromising investor protection?
So the strategy that we use in this case is this. Now, all of these networks already exist. Typically in private markets, it's usually only focused on institutions. And the reason being that for institutions, right, or institutions and HNIs, and the reason is that a lot of fund managers, asset managers, fund managers and whatnot, the amount of money you would spend doing like marketing or sales to fund managers, let's assume you spend on an average $100,000 every year for marketing or for sales. So hiring salespeople, all of that, to asset managers to get, let's say, $10 million AUM, right? If you are trying to get that same amount, like $10 million from retail, you spend a lot more. Because you're putting up billboards, you're trying to convince people in general. And even those people you're trying to convince, there's still limitations from your regulator, SEC. Right? And so it just makes sense for them to only focus on these HNIs. Quite simple. Now, where GetEquity comes in is we're saying we're going to be that middleman where, because our focus is on the retail side, and even on the retail side, we're not focused on just everybody. Now, SEC has a distinction called qualified investors. And so for you to be a qualified investor, you need to have a disposable income up to a certain amount. I think it's 10 million naira now, right, per year. Then you also need to have a certain level of sophistication.
That's like US standard. You're trying to bring in like some US standard into like Nigeria, because like I think in US it's like you should be a HNI.
Yes, $1 million for you to
like
be
200K minimum, or you have like $2 million or something like that in account.
Exactly. So in Nigeria it's like 10 million naira, which is like much easier. In fact, that's saying with 10 million naira, every single Nigerian that lives abroad meets that criteria already. You have 10 million Nigerians in the diaspora. So imagine you saying you have 10 million Nigerians who, by default, have 10 million disposable income. That's even a market that is better than what you have locally, right? But then even locally maybe not better, but then locally as well. I mean, if you look at PiggyVest, I think it was PiggyVest report, 4% of Nigerians earn 1 million naira. So even though it's not much, but 4% of Nigerians is about, if we're still using 200 million Nigerians, right? 4% of Nigerians is
that's
it's
8
about
million.
so that still in itself is a market in itself. Then you now look at Africa in general, like that, right? And so in itself, that becomes a market. And so what we're looking at is like this: $10 million is 10 billion naira. If you could have 1,000 people, right? If you have 1,000 people who invested, in fact, well, what we started with was 100K. If you have 10,000 people who invest 100K every year, then you've gotten 1 billion naira. If you have 10,000 people who invest 1 million every year, 1 million every year is 100K a month. You already have that 10 billion naira. And you have a market that you can grow up to like 500,000 people investing 1 million every year. That gives you about 500 billion every single year. So that itself is a market worth looking at. And so our whole criteria is this: the same structure, the same protections, the same SEC approvals that currently still happen, but it's only focused on HNIs and institutions. If we gathered all of these people, if we gathered all of these 500,000 people that are able to afford 1 million naira every year, what type of metric will we see as that? Because 500K, that's 500 billion naira. Anywhere in the world, that makes you a HNI. And so that's the goal.
Okay, makes sense. I think that's quite clear. It's more like looking like a crowdfunding strategy, so to say. Yeah. So now looking at regulation in relations to what you're doing and how SEC is being proactive around digital assets, like you mentioned, the ARIP and the number of companies. I think recently 7 companies, including yours, were added to their program, the sandbox, like you said. So now, do you see regulation as a constraint, or is it finally creating a certainty that founders have been waiting for?
Oh, I think it's creating that certainty like crazy. So on the one hand, right, one of the first things that, again, first of the people that meet that criteria, right, there are also people that are sophisticated, at least in a certain point, to understand certain financial investments, right? Somebody who typically makes $1 million naira a month, at least to a certain level, has used a digital app, whether it's a digital app for banking, for savings, or for investments. And so one of the things that they're looking at is, okay, this platform now that people have talked about, how do I know my money is secure? SEC stamp or an SEC sandbox license gives you that security, that assurance that, okay, there's certain things that for them to have gotten this, there's certain rigorous processes that the SEC has put them through to make sure that, one, my money is not going to get lost. You know, for example, you need to have liquidity provisions, you need to have like business continuity, all of those different things. So we can't up and disappear one day.
Okay, so now I really want to ask something like a follow-up question on this SEC overall thing. Do you feel, in your personal thoughts of mind, do you feel SEC is really trying to regulate, or do they have ulterior motives?
Oh, so I'm going to tell you this one for free, right? The current SEC DG, Dr. Emotimi Agama, has been probably one of the most forward-looking people I've ever met. And so when we launched at GetEquity, right, when we were doing the whole startup investing thing, as at that time, he was head of exchanges at the SEC. He was our contact for the SEC to be able to get a crowdfunding license at that time. And in 2021, the SEC didn't have a crowdfunding license. So over time, we have been engaging and engaging and engaging. Now, the man also has an advanced degree in digital assets. So like, he's someone who I would say is in the best position to spearhead this. He has written papers on digital assets. He has written, I think his most recent one is something on how stable coins would power like the Nigerian capital markets in general. So this version of the SEC, I can guarantee you, is very much pro. They're very much pro fintech, pro innovation, and pro capital markets. In fact, I think one of their main mandates is on increasing like participation in the Nigerian capital markets. And that's why you can see that, for example, players like Bamboo, Chaka, Trove, they've now had, if you can even go and see their numbers, right? They've ballooned in the last 2+ years. So, like to your question of ulterior motives, I actually think it's the opposite. I think this is one of those times where you have people in the driving seat who are actively looking for that. How do we get a lot of people participating in the capital markets? Like down even to the NGX. I think this is probably one of the best times we've had in the longest. Down to the NGX itself, the new like CEO of NGX Group is also someone that has been very forward in how we get new and active participation of Nigerians and even outside Nigeria in the Nigerian capital markets.
Okay, so I'll put a follow-up question to this. Do you think some companies are favored while some are not? Because I think they have tons of applications for licenses and just very few get. I think I know of one that has tried to put an application. Also another top popular one that the legal counsel is closed. A popular application, cryptocurrency exchange that pivoted into B2B services majorly from South Africa. Maybe you know what I'm talking about. So, but then their process is still, this thing is still in process. And even looking at the new number of people who are been admitted, they are not also on that list, right?
So I'll tell you one thing for free. One of the things that they're prioritizing is homebound companies, right? And it just makes sense, right? Because your capital markets is the bedrock of the country. And so one of the things that I will tell you for a fact that they're prioritizing is local companies first, right? Because if I'm going to remember, it's still a sandbox, right? So if I'm going to do this whole learning process with companies, it cannot be with any company that is going to carry their data back to headquarters. And it also has to be with a company that I can guarantee that I have, let me say, full regulatory control over. Now, that said, right, I think there's many things in the sense of, because they did a freeze on this. That was one of the reasons. This was supposed to be a yearly thing from 2024 when they started. But they did a freeze on it. And this new batch of companies is the first list of companies that they're registering after that freeze. So hopefully next year, there's going to be a new batch as well. I would say that. I would say that one of the things that I know, and again, just like I told you, for us, right, we've been on this since, if I'm counting when we first started, we've been on this since 2021. But for this ARIP, we've been on that since I think 2024. But like one of the things that I can definitely say is that they're very selective. They're being very selective. And it's for reasons in the fact that this is something that doesn't exist. Even when you look at other African countries in general, right? You have the Kenyan government now who is taking a page from what Nigeria is doing and trying to understand how Nigeria is doing what we're doing. I think I heard the SEC was sort of doing the only people that are ahead of us is South Africa, right? Kenya was doing a sort of study on Nigeria's ARIP. Ghana too just started their own too as well. So it's one thing where you're almost writing the roadmap. And even when you look at South Africa, it's really more on the exchanges side, that's crypto exchanges, than the actual like asset tokenization, stablecoin process and everything. So when you're building the roadmap where other people are looking at you, you also can't afford to fuck up. I think when like using all of those like contexts, you tend to see why I mean, they have to be a bit careful about certain things. But yes, technically, I'd prefer if this was, much faster, if I would call it that.
Yeah, you're very much aware that the first exchanges that got licensed in principle were Quidax and Busha.
Exactly. And if I tell you that Quidax and Busha have been on this since, I would say at the very least 2022.
Okay. Are they still in the process or?
Yes, they both. Yes, I think they still are.
I think I heard something like whether they were out of it or something. I'm not so sure. So, but
I know
anyways,
that Busha is still very much in like what's the word called? Busha is still very much in like conversations with SEC and all of that, right? In fact, I think Busha especially have taken themselves more to being like direct partners and handholders with SEC to like guide everybody else in. And so kind of like when even I remember I had a conversation with Bucci, who's CEO of Quidax, a long time ago. And he told me that from the application process, and this is why I think they've been on it since like 2022, is that they kind of helped with the whole initial scope and initial drafting of even what later became like this ARIP process. Because it's been a long time coming.
I think you're right. SEC actually has a paper with Busha on this whole licensing and all that. That a joint paper on that they published sometime. Yeah, so I think you're making a solid point. Anyways, speaking of which, anyway, you mentioned Bucci. Bucci is running away from this one-on-one. He's running away from camera, but that's on the side. So let's go on rise of tokenized assets, right? Tokenization now is one of the biggest narratives in global finance today.
Sorry, before we go on, I just need to mention that I have a hard stop at 2 because I'm supposed to join a call at 2:00. If that's fine.
Yeah, I actually have a call 2 by 2, but I was just thinking of extending it to like maybe 10 minutes into 2 max.
Okay, let's see if we can do 5 minutes. Let's see if we can do 5 minutes.
All right. Let's try. So let's go on tokenization right now. So it's one of the biggest narratives in global finance. Beyond the hype, where do you see the first reward opportunities for tokenized assets in Africa over the next 5 years?
Okay. When you said where do I see the first reward opportunities, I wanted to mention that we're already seeing that now. I don't know if you know, it's a company called Securitize.
No, okay. No.
Securitize and BlackRock have done it's securitize.io. They and BlackRock had created the first tokenized or the largest tokenized US Treasury bill. And then from there, they've gone on to tokenize private funds, all of that. They've tokenized quite a lot of things. In fact, they're the largest. Then after them is Ondo Finance and Hamilton Lane. And
I see.
Globally around the world, right? I mean, Securitize they just IPO now. They're unicorn, right? They're worth $1 billion. It is a madness because prior to Securitize and this tokenization, DeFi in itself used to be, if I put money inside a DeFi liquidity pool, maybe there's someone that takes that money and lends it. So they lend it to people who want to trade and all of that. And then after you pay back, they do collateralized lending based off that. And then after you pay back the loan, that's what you use as yield to people. But one of the issues with that is that we first started with collateralized lending, then we moved towards uncollateralized lending or under collateralized lending and then uncollateralized lending. And that left a lot of mess. I don't know if you know the guys called Goldfinch.
Goldfinch. Yeah, I think I've heard.
Goldfinch, at a point in time, they were sitting on $100 million AUM, right? Now it's almost they're almost a shadow of the shell of what they used to be. And the major reason being lending is a hard business. And now when you're lending, when you're doing real world lending, when what you are more or less is you're a technology company, what do we typically know about lending, right? Real world RWAs change that because you are a technology company, you stick with being a technology company. There are finance companies that have been doing this finance thing for hundreds of years, right? BlackRock has been available for years. JP Morgan has been available for years. They've built securities, all of these things around it. And these are things that typically have only always been accessible to HNIs. I think for BlackRock build tokens, a minimum of $5 million, if I'm not mistaken. So now what tokenizing does is it brings it closer to us. What they've basically done with RWAs is now you're giving me access into BlackRock's fund, which I typically would never be able to have access to before. And it's not just me, but now that infrastructure now becomes a core infrastructure for almost every crypto platform that wants to offer yield. Because now, instead of offering yield, instead of you trying to manufacture ways to get yield from to offer to your users as a liquidity pool, you put money inside the pool. I just basically buy BlackRock build tokens, right? It simulates what we typically do in the real world in financial systems. I give my money to a fund manager. That fund manager buys treasury bills or buys something, right? Or even I keep my money inside a bank. The bank basically buys treasury bills and parks the money in treasury bills, or they lend. Yield from that, they pay me out of it, they keep some. Everybody's happy, right? And so for tokenization in the African context, I think it's going to happen the same way. For African crypto companies, it's actually very rare for you to see the ones that offer like actual standard yield. And even for those that offer yield, it's expensive. But what tokenization allows for us to do is we can say a credit fund from ARM or First Securities that does 10% in USD. We're in frontier markets in Africa, meaning that our yield is even much better than what you see in the US or in the UK. So if I'm offering you 7 to 8% for just parking your money in, what will I call it now? Inside this, parking your money inside your crypto wallet in USDC, it's probably going to be one of the most beautiful things ever. So that instance or those instances is what we see from there. And then bringing things or bringing participation into local capital markets. The Dangote IPO, I think, is going to be it's going to be a game-changing IPO in Africa, right? It's one of the biggest IPOs. In fact, it probably is the biggest IPO that we've seen in this part of the world. With people who want to participate from different parts of the world. I see people from Cambodia, I see people from South America, I see people from Asia who want to participate in this. But how do they have access to it? Right now, there's no way, right? But the best way to do this is when you're able to tokenize, for example, the Dangote refinery IPO. It means that somebody out of China can buy $1 million worth. Somebody out of South America, a business out of South America can buy $1 million worth. So it changes the game for participation in our own local capital markets.
Yeah, true. All right, so while we're running against time, what do you think, if you could change one mindset about investing among young Africans, what would it be? What's one mindset people have that you think you should change?
I would say investing is a long-term process, right? We all look at investing as I put my money in January, by December, I can go and flex with what I've seen from it. But investing is a 10, 20-year business, right? And that's why you see, this is something that, let me say, the average American, the average European has learned. You commit to, let me say, even 100K every year for the next 20 years. 100K every month for the next 20 years. 100K is 1 million naira, right? And 100K every year is like 1.2. This 1.2 over the next 20 years will be like 20.4 if you were just doing a direct multiplication. But the beautiful thing about compound interest is that money in itself it grows into like about, if I'm not mistaken, 40-something million over time, which is twice the amount you put in. 200K grows as much as 100 million naira. And so like compound interest is something that is the most beautiful thing. I would say compound interest, the theory of compound interest, is one of the most beautiful things I've ever heard.
Okay. Compound interest. More like, so a strategy like DCA is a good one. Yeah.
Yeah, a strategy like DCA is an amazing thing to have.
Okay. All right.
But just
So,
continual investing, it helps you build muscle. And it's also something where you can invest money that wouldn't really affect you or wouldn't really pain you. But in the long run, the returns that you have would just be very, it's very ridiculous.
okay. So now let's look at AI meeting investing while we have limited time. Artificial AI is shaping how every industry is. How do you see AI transforming investment decisions, private markets, world creation in Africa over the next 10 years?
I think the very first way is through education. Just like the first question you asked, right? The average Nigerian, while understanding certain types of investments, is still not fully, what's the word I'll call it now? We still don't fully grasp how investments work in general. And so one of the things, I think one of the most beautiful things about AI is robo-advisory. Robo-advisory in the sense of if an AI agent can understand you, your risk, how you think, how you whatever, you can program an AI agent to, first of all, DCA for you, do research for you, invest into some certain investment in ways that you might not even feel it. So one of the things that Piggyverse did that changed the entire landscape with savings in Nigeria was I can just have money taken out of my account, maybe daily, can be 2K daily, right? Something that I might not really notice. But by the end of the year, that 2K daily has added up to give me almost ₦1 million.
Yeah.
In the same way with investing as well. Like this. And an agent is something that can work 24 hours every day. You can use it to listen to the markets, to see certain things. You can train an agent to basically operate like a world-class financial advisor.
Okay.
In those certain instances, I think in itself, that will change the game. The first way it starts is through education.
Awareness. Okay.
Education, awareness, then understanding your behavior.
Okay. All right. I'd have loved to elaborate more, but we have limited. So let's look at the funding gap. Having worked closely with startups and investors, what's the biggest misconception founders have about raising capital, and what are investors actually looking for today?
So I think a lot of people feel, okay, now that I have the idea, the next thing I need to do is go and raise money.
Okay.
They are like, and the average, let me say, investor sees on a daily basis close to 20 decks that are just like yours, right? And so the investors trying to do is to choose which one has the best chance at returning my money. Because again, it's not their money. It's other people's money that they are managing.
That they're managing, yeah.
So when you put yourself in those shoes, it's the fact that they charge other people to manage their money, meaning that even for the charging and then the returning money with interest, they owe it to those people to do that. And so it means that for an investor to try to invest in your business, they need to also see that you have skin in the game. A lot of founders think, oh, I have this idea is going to be, all I just need is money. But where's your own skin in the game? An investor wants to see where's the amount of money that you yourself have put into this. Have you put in an amount of money that they're able to know that, look, once this thing hits the fan like this, you cannot run away because you've put too much in there for you to even leave the business and go. And there's one thing I tell founders is like, look, as far as you, the founder, has not given up yet, then the business is not yet dead. Even if you are the only person that is doing the business.
Yeah.
The business dies the moment the founder says, yeah, I'm tired.
I'm packing up.
Exactly.
Okay, so international investors looking at the global market African opportunity are increasingly paying attention to Africa, just like we previously highlighted. But capital deployment still lags behind the opportunity. What needs to happen for Africa to attract significantly long-term investment?
To be honest, we need to have a lot more exits, right?
Okay.
For the money that has been put in, investors need to see the returns on those money. It's not, okay, this is the new valuation, right? You need to, if I put in money, I need to be able to have money back inside my bank account before I can say I want to put in more, right? And so because over time, I think in the past 10 years, over 20 billion has been put into the venture capital in Africa. We haven't returned 1/3 of that yet. So for you to get people to put in more money, you need to be able to return money.
True. I think that's very straightforward answer.
Yeah.
And we can only count like very few unicorns from Africa.
So even with unicorns, right? The main is, as far as they've not IPO'd, it's still paper money that investors are looking at.
Yeah, right. Another angle. So, but if you were building again today, you're starting from scratch in 2026 with a small team, limited capital, what problem will you choose to solve in Africa's digital economy and why?
I would say, so to be honest, there are many problems, right? Even in this same capital markets, right? I still wake up every day and see different other problems to solve in. So an example of what we just talked about now is in finance investing, I will still most likely be in fintech and maybe capital markets adjacent. But just like you talked about with AI, it's how can AI encourage more people to invest and more people to build their financial wealth?
Okay.
That's the first one I'm going to. Then the second one is usually, so I like to build things to solve my own problems, right? And I think AI has helped a lot with that. One other thing that I did recently was, how can I build a virtual assistant for myself? Because a lot of people say yes, they're trained virtual assistants, but they don't know how you work. You know how you work, right? And it takes a while for you to teach somebody. After you've taught the person, maybe the person has stayed for like a year or two, then the person moves on, right? And you also are happy that the person has grown to the point where they can move on.
Yeah.
But then you now start a fresh training on that new person. But when you've done this with a model that has data on you, all you're doing is that you're upgrading the AI model, but the data it has on you still remains.
Yeah. Okay. Makes sense. Now let's look forward to like the next decade or less than 2035. What do you hope Africa's investment landscape looks like, and what role do you think?
Balloon. I think it's going to balloon.
You think what?
I think it's going to balloon. It's going to explode. So one of the things that is happening with Africa now is a bit of stability. The last decade was not so good for us. In a lot of African countries, there was instability, price fluctuations, all of that. But we're getting to the point now where there's quite a bit of stability, right? We are even like everybody is sort of gaining against the dollar now. Kenya, Ghana, Nigeria. So we are getting a bit of stability, and all our economies are now back to being growing economies. I think the next decade, hopefully, if nothing changes, is going to be mind-blowing. It's going to just be exactly like the early 2000s, when a lot of diasporans were moving back to start up businesses. The entire economy was growing. If nothing changes, then I think we're back to that cycle.
Okay. That's a good expectation and vision. I hope we actually get to that stage. We need it actually in Africa.
Same.
So, personal leadership question. What's one leadership lesson you've learned the hard way as a founder that you wish someone had told you earlier?
The number one would be, your expectations of people is not really the expectation of themselves, right? So now you might look at someone and say that this person, yes, you see, like, it's not even expectation. I would say your Come on, let me just leave it at expectation. So you might see that this person is strong in this particular area and decide to like sort of grow them into that area, but that might just not be what they see for themselves. There's certain people that they just might not be. Some people also might just not be ambitious. Like before, I used to think, you know what, when you find a gem, you know, you must try to, you owe it to, let's say you owe it to
nurture the gem.
To nurture that. Not really, because sometimes it might bite back.
I think I've actually experienced that with people who have worked closely with me too. And that's actually very true. So, final question, and a very funny question. How do I get equity?
Put money in. Just download the app, put money in, and let's grow your money for you.
Okay, all right, that's fine. So thank you so much for joining us on this. We're looking forward to becoming Africa's foremost media platform. But I noticed that gap while working in BitGet, like whenever I want to do PRs and all that. So we don't have like a mainstream Bloomberg, Cointelegraph, or CoinDesk that's locally from Africa.
Exactly.
So, yeah. So that's the idea and the goal and the gap. Telling African story from the founders, local operator perspective, regulators, etc. So we're so happy to tell your story. Personally, I'm happy to tell your story and also to connect with you. And I'm looking forward to seeing the success of what you're building and also what we are building as well.
Thank you very much, man. Please share me as much as you can as well, even other articles. I want to take a look.
Okay, all right, sure, there's no problem. I'll also share you all of this when we're done. By the way, that's true. I think we should connect to on WhatsApp or something.
Yeah, so let me send mine.
Okay.
Yeah, so just text me like, you're too close to me, not to meet up. So
yeah, I know. Yeah, you're right. So that's the same thing I thought. Let me see. Where is the chart?
Bottom right.
Okay, yeah, I've seen it.
All right. So I need to run off now. Talk to you later, man.
Okay.
All right. Cheers, bro.
All right. Cheers, man. Nice one speaking. All right.
Take it.
Yeah, sure.